What is going on, everybody? Welcome back to another dividend video. In this one, we are going to look at CII, also known as BlackRock Enhanced Capital Income Fund. With that being said, let's go ahead and jump into this video.
I've been getting dirty money.
Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So that being said, let's jump back to the video. What's going on, guys? So this one right here is a different fund than what a lot of you guys are going to see, and this is something that I want to go on ahead. Okay guys, we're back. So this one right here, BlackRock Enhanced Capital. So this is actually CEF Connect. You can see it here in the top left corner. If you just look that up, or cefconnect.com/fund/CII, this will pop up. You can look at other tickers as well up here in the top right hand corner. But we want to look at this one today. So the first thing is we look at a closed-end fund, not only because some closed-end funds can be all right, but we want to know what the price range is versus what the actual, basically the assets are worth. Now, the NAV price is higher than the actual price, which is a very, very good thing, because if you go and look at some other ones like PTY, which I used to love this one, and it made me good income for quite a while. And this is the problem. You do not want this chart. This is something bad that you see in a lot of them. But CII is actually one that stays very, very close to its NAV. You can see that its NAV was higher than what its price was, which is a very, very good sign for a closed-end fund. But what we want to see, and you can do this since inception, and it's very, very close the whole entire time, which is solid. But we want to look at the max overall, because if you look at year to date, you're always going to get some mixed emotions on these. I want to look at the max. So the max overall actually looks very, very solid for a dividend stock. And then that's something for me that, because this is an income fund. This isn't anything else other than an income fund. So it is a little bit higher in price. I'm not going to lie. You're looking at about that $20, which is okay. But you're actually looking, I'm going to say that it's probably about 20 and a half. But something I think we all need to look at here. And this is something that CII is actually something that I love about this stock here. And you're going to see that they pay monthly, and that their stocks, or that their dividend fund has actually started increasing. So it's 0.83, then it jumps to 0.87, which is that's a very, very good sign. Even during 2020 and 2019, it went up. That is a very positive sign. Then in 2021, we're going to bump it up again to 0.93, and then they did it again this year to 0.10. That is a very, very good sign. Now, you're not going to be able to buy this on Robinhood because it is a closed-end fund, and they don't allow closed-end funds. I don't think that's smart on their part, but I'm sure they have their reasons and so on and so forth. But again, I like these stocks, and I would rather go into a TD Ameritrade or an E-Trade where I have my long-term account and continue to buy stocks like these. Again, I'm going to pick up a few shares of this more than likely. I would like for the price to drop a little bit so I can get it on a discount, but the stock market has dropped a little bit and then bounced back. So, maybe you can't just time the market. Dollar averaging in is always better. Just remember that. So the one thing we always want to look at when we're looking at these is, where does it actually end up? How does it do compared to others? So as you can see, we have $10,000 here. We can start with $1,000. Most Americans only have $1,000, so we're going to start with $1,000, and we're going to contribute $500. I've said this time and time again. We start with $500 every single month. Why? Because that is what the average American pays in a car payment. You don't need your brand new truck. You don't need your Escalade. You don't need your brand new Honda or whatever the case may be. You don't need it. Go get a Honda Accord for a couple grand. Save the money. Don't maybe not invest, get out of that monthly payment, and start being able to put that money towards this. Now, if you can afford whatever payment you have, plus put in $1,000 or a couple $1,000s in every single month, then you're not the person I'm talking to when it comes down to this. And then we're gonna put $500, and that's monthly. Make sure that's monthly here. We're not going to rebalance anything. We are going to reinvest the dividends, and we're going to display the income here. This is a big thing for me. You guys know I am a dividend, or I'm an income investor. Again, majority of my income comes from stocks and futures and markets and stuff like that, so you got to be smart with it. So this one we have Devo, which is a popular one, and we're actually going to probably switch this one out for an HRZN. Actually, yeah, we're going to go ahead and change this out. So HRZN, and Devo is a very, very good stock, just so you guys know as well. I did a past video on it. I'll try to link it down below. And we're at 100%, and we are comparing it to the Vanguard 500 index, so which is basically the S&P 500. So we're going to look at these, and since 2014, you're going to see that they're pretty close together. HRZN does dip there for a little bit, gets even higher than a little bit, and continues to be pretty normal, just like the rest of them. Qyld, as you can see here, is slacking a little bit below the rest of them, just a little bit more. Then you have CII, which is a little bit further below, and you can see the totals up here still. HRZN obviously going to be the highest amount here, which is pretty good. That's just because that's dividend investing. CII is going to be third, which isn't far behind the VOO, which again, this isn't going to give you a lot of income though on that. And then Qyld, which is mainly an income fund. Now we're going to look at the comparisons here on the actual income portion of it though, because that's a big thing for me. Obviously VOO is an S&P 500, so you're not going to get much income really from that in dividends at all. So first year, they're all very, very similar, HRZN, CII, and Qyld. So as you can see, you're not going to get the capital depreciation, but you're still going to get that dividend, which is pretty important to me, to be 100% honest with you. HRZN, as you can see, is going to start outperforming a little bit here. But CII is still holding in with Qyld when it comes down to dividends, which is a very, very solid thing to have. And then again, next month, we're still there pushing. Again, we're pushing. CII, again, we're just slightly underneath Qyld, which is okay. And obviously, Qyld had a pretty big year here. Now, this can happen. CII is continuing to go up in value and paying out your dividend. You're not that much far behind HRZN, but you are a little bit further behind. Again, I love HRZN, the stock, but I also like CII because the capital appreciation. I think that's something that a lot of people miss out with, and they think Qyld is the best because, oh, it pays out this great dividend, but you guys don't realize if you look at a Qyld chart, and we can look up Qyld, this chart, if you look up at the max, all it has done, guys, is pretty much go down in value. And that's something that I really don't like. So 2021, you would have ended up with about $7,500 for HRZN, and CII with about almost $5,000, so we'll call it $4,500 in monthly dividend, or in yearly dividend, but monthly paid. And then 2022, you're already at about $1,000 for CII, plus a little bit more, which is a good start. Which means you're gonna get up to about that $6,500 this year in 2022, as long as those dividends continue to pay and you keep reinvesting those dividends. But again, the biggest thing I like in CII, and I'm willing to invest in the CII for a little bit, is the capital appreciation. You're getting that monthly dividend, plus you're getting the capital appreciation. And guys, this is BlackRock. If you've ever looked up a stock, BlackRock, guys, this is a huge, oh, it didn't even do it. BlackRock ETF. Yeah, they have a ton of stuff here, and it's not even gonna go through everything. But there's just a ton of stuff they've done, just absolutely phenomenal. And if you guys go through here, it'll tell you CII, BlackRock Enhanced Capital. It's a great company. They've done very, very well for a lot of people. Make your own decisions. Do your own due diligence. CII is one that I do plan on allocating some money into. And again, guys, you don't have to just choose one of these stocks to start investing into. Maybe you find 4 of them that you really, really like. HRZN, CII. Maybe you go get another one that you just seem to like a Devo and a Qyld, and you invest into all 4 of them, so you get all that income no matter what, and it continues to grow, and maybe Qyld gets back on the right track. But with that being said, thank you guys all for watching this video. I really appreciate you guys. Click it. Make sure you hit that thumbs up button. It really does help the channel out.